afternoon to all our viewers. You're watching Countdown right here on Bloomberg Quint. It's stiff pressure on the indices once again as we seem to be closing out the week on an extremely weak note. The Nifty is down about 1.6%, but let's quickly go across to the headlines before we take a look at the internals of the market. 40 out of 49 economists polled by Bloomberg expect the Monetary Policy Committee to raise interest rates by about 25 basis points today. The market continued to trade lower ahead of the monetary policy meet. The Nifty wipes out the 2018 gains so far. And oil marketing companies fall to multi-year lows after the centre cuts excise duty by 1.5 rupees per litre and ask oil marketing companies to absorb a 1 rupee cut in their profits as well. States cut levies in tandem. With a maze of 348 entities, the IL&FS problem is significantly larger than previously thought, says the new board. Good afternoon, Neeraj. It seems the market pain seems to be a bit more exaggerated and the weekly close is going to be particularly disappointing.
You bet. And this is minus the banks, so it's even more worrying. But yeah, bring up the Nifty chart. You would argue that we are off the low. We are not at the lows of the day, but that's hardly respite because we're still in that range of near the low point of the day for the Nifty. The Nifty bank is marginally in the green. So that's a bit of a surprise, really, that now the pain on the index has been without any kind of contribution from the Nifty bank. You've seen this throughout the day. We've been bobbing between the red and the green, and while these gyrations appear deep, we haven't seen any deep gashes on the Nifty bank today. The market breadth should come up on your screen in a moment. And of course, the mid caps and the small caps, and both of them down about 1%. And the market breadth should be adverse, about 2:5 in favor of the declines. But the heat map should come up on your screen now, and you'll see OMC is right at the bottom of the pile. Remember, GAIL, ONGC and the others too had corrected in the session today, but all marketing companies continue to grind lower. 15, 18, 20%. ONGC down another 14%. Remember, ONGC, the damage is not done as yet in terms of formal news announcements, but the market believing that this will happen. So deep correction there. GAIL about 4% or 8% down, and Reliance continued to grind lower about 4% too. Within the rate sensitive pack today, from the heavyweights, HDFC has corrected about 2.5%. And I suspect that when you look at the contributors list at the end of the day's trade today, HDFC would be right up there in the top 4 in terms of point contributors as well. But a large tick of red, very little green, just a little bit of IT, some HDFC Bank, and maybe a Titan holding out. The broader markets, a lot of red too.
Definitely, Neeraj, and it percolates down to the broader markets, and we've been seeing that across the board. And oil marketing companies, not just on the larger index, but even in the mid-cap space, the likes of an MRPL, you've got a Chennai Petro. Both these stocks on high volumes have been seeing some amount of pressure building up. Aside from that, there has been pain across the board. So pulling up a few names that have seen pressure building up, you've got the likes of an Oberoi Realty, the likes of an EIL and Imami that witnessed pain off to the tune of about 6 to 7% apiece. Ahead of the policy, we're looking at the banks, and like you highlighted, the bank Nifty itself has managed to stay up in the green. A few of the smaller names, though, not so much so. So you've got cuts coming into a Bank of Baroda, an Indian bank, which is down about 4%. Larger names have still managed to cope, and Kotak is in the green, and IndusInd is in the green. Aside from that, a few other volume buzzers to quickly pull them up. And Oil India, we've got 3.7 million shares which have been traded on that counter. Stocks down 10.5%. Jet Airways loses on the back of heavy volumes as well. So closer to 90 lakh shares been traded on Jet Airways. It's down 3.25%. And a United Breweries is the other one that loses about 5.5% with heavy volume supporting this kind of price tick on the downside. But what's happening in the futures and options space on the index in particular, because we've been seeing fresh shorts, aggressive shorts building up on the index. And what's the case like in today's session? Darshan joins us for more details on that. Darshan, good afternoon.
Good afternoon, Devina. Fresh short positions are being clearly seen on the Nifty at this point of time on decent open interest build-up. If you're looking at the Nifty is down almost 160 points. It's below the 10,500 mark in trade. The Nifty futures are trading at a premium of 38 points. Fresh short seen open interest build-up of 11%. Now, surprisingly, if you're looking at it, the bank Nifty has managed to stay afloat at this point of time with fresh long positions that are being taken, and there is traction ahead of the anticipated RBI meet that will happen. The Nifty is mainly down on account of heavyweights in the counter. It's some of them the IT and basically the oil marketing companies. The VIX has now managed to reach levels of close to 20. Now take a look at where total open interest build-up is and where the open interest change has happened today, and that is where you'll come to know where positions are being taken. If you're looking at the open interest change in trade today, 10,500 to higher levels 10,800 is where call writers are extremely aggressive. They want the market to go down, and put writers have been shedding positions at higher level. If you take the total open interest and into consideration, you can clearly see where positions are. 10,500 remains the biggest support. 46 lakh shares is the total open interest, and at higher levels 10,600, 700 still positions are taken. So there could be a bounce potentially. So and the Nifty is trading below the 10,500 mark in trade. So these positions, if the market manages to stay at these levels, will unwind in position, and there could be more potential selling that's coming in. A couple of stocks that I want to highlight in today's trade right now. The first stock that I want to talk about is Eicher Motors. After falling almost 10 to 12%, the counter has managed to rebound significantly, but now again has gone into the red. Open interest build up of 3%. It's seeing a little bit of fresh short positions. Engineers India is seeing fresh shorts on high open interest build up of 20%. Pull up KPIT and mid-cap IT. Among the mid-cap IT, KPIT Tech is seeing fresh shorts, open interest build up of 9% on the short side. And DLF is the last counter that I want to point out. DLF is seeing fresh shorts on open interest and very low open interest, but the traction certainly seems to be on the negative side for DLF.
All right, Darshan, thanks very much for that. So that's the futures and options wind up in terms of the positional trades being taken this afternoon in a falling market, with the indices, the Nifty now cutting across on the downside below that 10,500 mark. Focus obviously remains in the kind of heavy cuts that have been seen in the oil marketing basket and the oil and gas themed stocks. So the likes of an HPCL, BPCL and IOC. ONGC is down about 13%. The centre has decided to cut the excise duty on petrol and diesel. It's also asked oil marketing companies to absorb a 1 rupee cut, bringing down prices by at least 2 rupees 50 paise across the country. And if you live in a BJP ruled state, you may end up saving a tidy amount on your fuel bill, while the government maintains it's not going to hurt its finances. But the same can't be said about oil marketing companies. Samit is here with us to explain why and to address all the specific issues related to what this does to some of these oil marketing companies.
So there were a couple of changes that came in yesterday. First, their excise duty was cut by around 1.5 rupees. And second, OMCs were asked to absorb a 1 rupee impact. So if you see this table, you can clearly see the difference. Now, these are the today's price in Delhi, this one. And this is what the prices would have been without the cut. So you can clearly see here how the price charged to dealer has come down by 1 rupee, that is, it has come down to 42.5, and this 1 rupee impact is the OMC impact. And second is that excise duty has been reduced to 17.98 from 19.48. Now this is for petrol. Now if you see for diesel, the price charged to dealer has come down to 45.86. This is the 1 rupee impact that the OMC is bearing, and this is where the excise duty has come down to 13.83, and the final diesel price is close to 72.95. So for excise duty, we know what will be the impact, but how OMCs are going to bear this impact? They will lower their gross marketing margin, and post this 1 rupee impact, their effective gross marketing margin on sale of every litre of petrol and diesel will come down to 0.7 and 1.4 rupees, which would be at a 5-month low. Now earlier in the last 1 year, we have seen this kind of lower gross marketing margins in 2 occasions. One during the Gujarat election, that was during this December 2017 phase, where the marketing margins were close to 1.3 and 1.2 rupees. And secondly, we had seen this during the Karnataka election phase, that was in May-June, where the gross marketing margins were this low. So this is nothing new, and post that we have seen a steady rise in the gross marketing margin, but still the share prices of the oil marketing companies have stumbled over the last 2 days, and that is because now over the next 7 to 8 months, the crude oil prices are expected to remain at an elevated level, and along with this, for the next 8 months, there are at least 9 state elections and general elections coming up. And with this kind of gross marketing margins, and given the history that we have seen during the election season, these margins could further fall for the oil marketing companies, and that is the reason why investor sentiments have now become negative for the oil marketing companies.
All right, Samit, thanks very much for that. And on the back,
I was wondering though that if we can decipher which of the 3 names have gotten hurt the most, and after the falls that we've already seen, is there some more downside? Samit, is there any data that after the falls that we've seen already, how does the valuation picture look like, and which of these 3 would be impacted the most?
So if you see among these three oil marketing companies, Indian Oil Corporation, BPCL and HPCL, HPCL will be impacted the most because the marketing segment contributes nearly 61% to the total EBITDA of HPCL. As you can see here, it gets around 61% from the marketing segment, while Indian Oil Corporation and BPCL get around 19% and 39%. So they are well diversified, but HPCL will be the one which will see the most of the impact. And given by Kotak Securities estimates, if you see, every 0.5 rupees fall in the marketing margins of the oil marketing companies will impact their earnings per share by around 12 to 21%, and HPCL's earnings will be impacted by 21%, while that of Indian Oil Corporation and BPCL will be impacted by close to 12% and 16%. This is on 0.5 rupees drop, and this time it's a drop of around 1 rupees. Lastly, two positive things that came out from this announcement. First was there could be a possible market share gain for the oil marketing companies. As you can see here, the private players have a share of around 7% in petrol and around 8% in diesel, because it's very highly unlikely for the private companies like Reliance, SR and Shell to bear this 1 rupee impact on their margins. So this could be one of the positive gains, but not much, because you can see here clearly the market share of the private players is less than 10%. Second, post government has cut this excise duty and they have bared this 1 rupee impact, 12 states have come out and reduced the VAT amount, so which gives this oil marketing companies further room to increase their margins going forward. So that could be one of the positives, but we'll have to wait and see how that pans out. And on valuation front, your question, now if you see the price to book for all the three oil marketing companies, they are trading at its 4-year low. In fact, for Indian Oil Corporation and HPCL, the price to book is just 1 times as of now.
All right, Samit, thanks very much for that. So that's a detailed analysis of the impact of the cut that the government has asked these oil marketing companies to take, and the impact on their profitability as well. Most of these stocks double-digit losses yesterday on announcement, and today as well, no respite, almost about 17 to 18% cuts coming in across the board. Quickly, if we could just highlight the currency as well and see where that's trading at. The equity markets nonetheless have been under pressure, but the currency, so to speak, 73.62 is where it's trading at. Yesterday's low of the day was about 73.81. You're going to be closely watching out for the RBI policy that comes about in just a few minutes from now, and whether or not they actually take this into consideration. We've seen since the last policy, the rupee itself has slid almost 7%. You've got crude oil, which has spiked 10 to 15%, almost in that range from the last policy. So there are a lot of factors to keep in mind as we move into the policy. Yeah,
we'll start the coverage in just moments from now, but just before we do that, and before we take that break, a few stocks and just highlight them. Praj Industries is up about 4.5%, so after getting clobbered a bit, it's back to almost that 100 level. Jubilant Foodworks has some gains to itself, so 1173, that's about 4.5% higher. Sonata Software about 3.5% higher. Manpasand Beverages 3.5% higher. Equitas Holdings has some gains to itself, so that's not doing all that poorly for itself. There are a few names that are standing out on the gainers list, and on the losing side, I mean, the HPPP, RC and the ONGC, actually even Oil India, those 5 names top the list on the Nifty 500 as well. But giving close company are stocks like Chennai Petro and MRPL, not surprised there. United Breweries has some losses to itself, about 5.5% lower as well. And Kansai, Nerolac and some of the other paint companies too, bearing a little bit of brunt of selling. Kansai Nerolac is 7.5% down, currently trading at 402. Tell you what, let's take a break. On the other side of the break, we will see you with an extensive coverage of the RBI's monetary policy. Stay tuned to Bloomberg Quint Live.